Hey, this is Dave Bolduc with the Bella Group. Welcome to my weekly real estate market update. Today is September 9th. The year is going by quickly, huh? So wanted to Hi, it's Dave Bolduc with the Bella Group. Welcome to my weekly real estate market update. It's September 9th. Wanted to dig into the Connecticut market and take a look at some headlines that are out there and really put the facts behind the hype and the drama that's being thrown around out there. Before we get into that, I wanted to touch base on the standard stuff. The YouTube algorithm, please like and subscribe. It's really helpful. Gets the word out to others that there's some good content here, and hopefully you think there is. Comments below if you like my content. If you don't, let me know. If you got questions, if there's things you want me to talk about, that'd be fantastic. I do appreciate all the comments that I get every time. So talking about the market right now, we have 6,147 homes active on the market or coming soon, both. And that's down about 400 over the last couple of weeks. So we're still getting new houses on the market. Houses are still selling, but we're seeing a little bit of a inventory erosion right now. And that puts us at about 1.5 to 1.7 months of inventory on the shelf. Just as a reminder, we like to see about 6 months. So we are still in a strong seller's market, but at the same time, we're seeing a little bit more calm market. There's a little bit less demand out there, and that's enabling buyers to have a little bit more time to breathe, to think, and to make some take some negotiation steps in order to try to get a better deal. So it's even though it is a low inventory situation because of the reduced demand from the higher interest rates and higher prices, those buyers that are still out there do have a little bit more breathing room. So one of the big headlines that we constantly see, and I'm going to pull this up so that you guys can to see a few of the headlines that I'm talking about. And this one is from Bloomberg. And I want to emphasize that the articles or this is CNN, sorry. The articles are very accurate. They're fact-based, there's good information in there, but what we see in social media, and I want to share another one now, just so you can kind of see what I'm talking about. This is the CNN one. I just had the Bloomberg one up. You can see that, again, new home sales falling as prices rise, take toll. You read through the article and it provides a lot of really good information. Then you go into social media and you see a lot of these articles being shared and talked about, and it's doom and gloom. The world is over. We're going back into a 2008 type style housing crash. It's a huge bubble. I'm going to show you a little data that clearly shows that we are not in a bubble, and that everything is kind of just reverting to the mean because we saw a big run up in 2020 and 2021. So let me pop over to that really quick so you can kind of see what I'm talking about. And this is a really good website I'm sorry, I'm having a hard time here. There we go. This is a really good website that I've found recently. It's called tradingeconomics.com. You can see here, this is the new home sales, United States new home sales. And you can see there's all sorts, you can calendar forecast, all sorts of good information. This is a chart of what the estimated annual new home sales is by month, right? So back in January, they thought it was going to be, the numbers looked like it was going to be 831,000 new homes sold for the year. Now it looks like it's going to be 511,000. And you can see it's crashing down. This is what, 320. So it's a big drop, 30-40% over the course of the year so far. Now let's step back a little bit and take a look at what it looks like over the max time frame, and it's a little bit different. So you can see this goes back into the 60s. So the 1969, 1980, 91. You can see right through here, we were in the 500-600 range. And then we had a big run up in the 90s up until the early 2000s. And then we had the big crash. And this is new housing starts. You had the big crash. And then we started to come back up. We spiked up dramatically, and then we started to come back down. So we're kind of reverting to the mean. If you look here, we're kind of reverting to the mean. We're not going through some massive crash. 2013, we were down here in the 200,000 a year range. Now we're, right now we're at 511. And I think that's going to settle out as inflation settles out, as interest rates start to kind of coalesce around where they're going to be. But this it's not the grim picture that everybody, there's a lot of people are making it out to be. I think it's a lot of clickbait and a lot of, how do I get more advertising dollars by making these dramatic videos? Because we look at, if you look back to 2020, 2021, where you can see we were up over 1 million, all of a sudden we're at 510, 50% drop. It's the end of the world. No, it's not. This was the outlier here. So and then this is new homes. So let's go to existing homes real quick. Take a look at existing home sales. Because this is another one that people do talk about. We're down at about 4.81 million is what the expected new home sales for the year is. Last year it was over 6 million. So that's down quite a bit. It's down about 20%. Well, why? Again, it's the same thing. There's almost no inventory on the market. We'll look at inventory in a second. There's almost no inventory on the market. Interest rates have doubled, almost tripled from the 2s up to the near 6s. And prices have continued to climb. So all three of those things make it very difficult for a buyer to buy. You have very few choices to buy. It's much more expensive to buy it, and your interest rates are much higher, which also makes it more expensive. So, but this is over the last year. Let's blow it out to the maximum again, back in the 60s again. And you can see once again, we're kind of reverting to the mean of the last 10 years. So if you look from 2010 to 2020, you can see we're kind of right in the middle there. And we're coming off of 2 years of very high existing home sales. Makes sense that we're going to come down and kind of revert to the mean. So again, and if this starts dropping off dramatically, yeah, big difference. But right now, we're kind of reverting to the mean. I'm not really seeing anything that's crazy here. Let's look at total housing inventory. And this is another one. People are saying inventory is climbing. It's going through the roof. Oh my goodness, what are we going to do? We're going to have this massive flood of inventory. And could we? Sure, we could. I don't see any reason. It's not going to come from foreclosures. Foreclosures are not happening at anywhere near the rate that they were pre-pandemic. It's not coming from new construction. We just showed that new construction is coming down. And the only other thing is existing home sales. And we are seeing some, and we're seeing those come down as well, right? So if we look here, inventory is coming up. If we kick it out to the maximum, it shows a completely different picture, right? So you can see back to the 1980s, we were kind of in this 2 to 2.5 million range. And then we had this big run up into the 2007. A lot of houses were being sold for sale, and were being bought and sold. And then we got this big peak over here, and we're seeing it drop off, right? And it's been dropping off for a long time since then. We're burning down the inventory, and we got down into kind of an equilibrium back in the early, the 2010 to 2016, 17. We're kind of back in that median, and then we've dropped below, and we're starting to come back up again. But I want to point out to you the seasonality of this. You can see these ups and downs. The peaks are summer, the valleys are winter. This is a July reading. July is in the summer. I know I'm saying things that are pretty obvious here, but we're going to expect to see this start coming down. If this keeps rocketing up, different story. Then we'll take a look as to what's going on there. But I expect this to turn around and start coming back down. The reason for that is inventory drops off in the winter and it goes up in the summer. That is it. You can see the seasonality of it. It's right there. So looking at very short time frames, you can inject all sorts of drama and all sorts of inaccurate conclusions. But if you just zoom out a little bit and look at the big picture, you can really see that there's a lot of data that says that we're still in a very low inventory situation. Foreclosures are extremely low. New housing is dropping off. New housing building is dropping off dramatically. And the number of homes being sold that are existing already is also dropping off, which is going to continue the supply crunch. Even though demand is down, supply is down lower. So we're not going to see a big flood of houses on the market. We're not going to see a big crash of housing prices. Housing prices are starting to slow down a little bit. And what I mean by slow down is they're not climbing as fast. They're still climbing. They're not doing 15 to 20% increase per year. Maybe they'll end up around 4 or 5% by the end of the year. It's not going to be negative. It's not going to be, you were at 300, now you're at 290. So that's just not going to happen until inventory goes up. And we've already covered the inventory, the supplies of inventory just aren't happening. Foreclosures aren't happening. New home sales aren't happening. The average person stays in their home over 10 years now. It used to be over 7. So we're seeing people stay in their houses longer. There's a part of the reason why we don't have as many houses on the market. All these things come together, low supply. Even though demand is down, it's still higher than the supply. So we're going to continue to see housing prices stay strong. They're not going to go up the way we've seen them, but we're going to see them, I guess flatten out would be the way to say it. And mortgage rates, I expect mortgage rates to flatten out as well. They're going to be somewhere in the mid 5s is what I'm guessing once everything settles out by early 2023, mid 2023. So I'm going to stop sharing this and then just want to touch on a couple other things. Real estate is local, okay? Real estate inventories are climbing across the U.S. Like I said, in Connecticut, we're at 1.5 to 1.7 months of inventory, depending on how you estimate demand. Across the U.S., they're saying about 3 months, still well below the 6-month line. But most of that inventory climb is being seen in the West. It's flat to maybe up a little bit in the South and in the Midwest, and it's actually down in the Northeast. So real estate is local. You got to look at what's happening in your market. There's regional, national, and international events that do shape the market, but it's driven by the local events. We're seeing prices climb much more slowly than we have over the last couple of years, but they're still going up. When you see these price reductions, that's because the house was priced assuming that you're going to get a 20% increase year over year. That's not happening anymore. So they have to take some of that back to get back down to where the market is. And there's, like I said, inventory is flat to even it's going down a little bit over the last couple of months or couple of weeks, excuse me. So sellers, it's a great time to sell your home. There's a lot of opportunity. If your house is in great shape, it's going to go fast. You're going to see multiple offers. And, you might even get over asking, because we are seeing that in instances where the house is really, really nice, because all the buyers are looking for those HGTV experiences. If the house needs a little bit of work, there's options, and we can definitely sell them. I just sold a house up in East Hartford that needs a lot of work, and I sold it for a decent price. And so just keep that in mind. Buyers, get pre-qualified and stay close to your lender as these interest rates change and as they fluctuate. If you're open to doing some upgrades, there's a lot of opportunity out there. 30 to 40% of the houses out there need some kind of work, and they're just sitting on the inventory because nobody wants to deal with that. It's a great opportunity if it's something you're interested in. If you want the perfect house, the story's still the same. That's where the competition is. Be prepared to move quickly. So I wanted to kick over here to one last thing, which is the primary mortgage survey. So let me get to that really quick. There it is. Let me share that. This is the Freddie Mac primary mortgage market survey for 9/8. They do it every Thursday. We're at 5.89%. You can see right in here that we kind of peaked out around 5.81, and then we started coming back down, and now we're back up, and we're back up to a 5.89, which is kind of the high for the recent times. I do want to zoom this one out as well, so you can see over the last 10 years. Yeah, we're over the last 10 years, man, we're up, aren't we? But if you go back to all time, oh my goodness, we're way down. And you can see the scale down here from back in the late 60s, early 70s. The peak was out here. I think it was 18 point something percent. It's not 18.36 on September 25th. That was the peak interest rate. We're at 5.89 right now. So it's a long cry. It's a far cry from the 18.36. Just keep that in mind. Keep perspective. And I do believe that we're going to end up probably in the mid to low 5s long term. And that's really going to depend on inflation, how that plays out. So I hope this was valuable to you. I don't like doing all the exciting, clickbait type stuff. I like to try to give you the real information so that you can make reasonable decisions that allow you to move forward. And if moving forward is staying where you are, that's great. If moving forward is selling a house or buying a house, I would be honored to be able to help you out with doing that. Again, throw some comments or questions down in the comment section. I look forward to talking to you again soon. Have a great day.